While the S&P 500 has been going nowhere in 2026, one ETF has quietly gained over 11% year to date. No hype, no AI buzz, no flashy tech stocks, just 100 boring dividend-paying companies doing exactly what they were built to do. And here's the part that should make you stop and pay attention. The people who saw this coming didn't do anything complicated. They didn't time the market, they didn't chase trends, they just owned two ETFs, SCHD and VTI. That's it. Today, I'm breaking down exactly why this two-fund combination is working right now, what the real income numbers look like in 2026, and how you can build this portfolio no matter where you're starting from. Stay with me. Quick reminder, everything I share here is for educational purposes only. I am not a licensed financial advisor. Always do your own research and speak with a qualified professional before making investment decisions. Here's something nobody wants to say out loud. Most investors who loaded up on tech and growth stocks over the last few years are looking at a very different 2026 than they expected. 76% of investors are worried about a market crash this year. Nearly half say they are completely unprepared for a recession. And the market's recent volatility, driven by geopolitical tension, oil price pressure, and sticky inflation, has left a lot of portfolios spinning. But here is what's interesting. The investors who built simple, boring, dividend-focused portfolios, they're not spinning. They're collecting income. They're watching their holdings outperform. And they're doing it with two funds most people completely overlook. Let's get clear on what each fund does, because understanding this is the foundation of everything. VTI. The Vanguard Total Stock Market ETF owns the entire U.S. economy in one fund. Over 3,400 companies, large, mid, and small cap. Apple, Nvidia, Microsoft, but also thousands of smaller companies you've never heard of. It currently yields about 1.17% with an expense ratio of just 0.03%. Its entire job is long-term growth. SCHD, the Schwab US Dividend Equity ETF, is built completely differently. It focuses on roughly 100 financially strong companies with long track records of paying and growing dividends. It currently yields 3.35% and has delivered 481% cumulative total return since its launch in 2011. It screens companies on cash flow, return on equity, and dividend consistency. These are not speculative bets. These are businesses that have proven they can pay you through recessions, through market crashes, through everything. Now here's why you need both. VTI captures growth, especially in tech and small cap areas where SCHD has no exposure. SCHD captures income and defensive strength, quality companies that hold their value when things get shaky. VTI grows your wealth. SCHD pays you while it grows. Together they cover every season of the market. This is the part I really want you to hear. SCHD struggled during the AI boom of 2023 to 2025 because it has no meaningful tech exposure. But as the market rotated away from tech in 2026, SCHD's defensive, value-oriented strategy made a massive comeback, making it one of the best-performing dividend ETFs in the market today. SCHD is up over 11% year-to-date in 2026, well above the broad market, and it's paying you a dividend on top of that. This is exactly what dividend investing is designed to do. When everyone was chasing AI stocks, SCHD was quietly building. Now that the music has slowed, SCHD is the one still standing and still paying. It doesn't mean tech is dead. VTI still owns all of it. So when tech eventually leads again, your VTI shares will capture that recovery. You win in both directions. Let's talk real money, because vague doesn't help anyone. With a 60% VTI and 40% SCHD split, your blended portfolio yield today is approximately 2.04%. Here's what that means in actual monthly income. To generate $500 a month, $6,000 a year, you need approximately $294,000 invested. To generate $1,000 a month, $12,000 a year, you need roughly $588,000. To generate $2,000 a month, that's $24,000 a year, you need around $1.18 million. Now, before those numbers feel discouraging, here's the part that changes everything. SCHD has grown its dividend at nearly 11% per year over the last 10 years, even using a more conservative 7% and 9% growth rate going forward. The $1,000 a month your portfolio generates today could become over $2,000 a month in 10 years without you adding a single extra dollar. You're not just collecting income today, you're planting an income tree that grows every single year. Here's the simple playbook. Pick your split based on where you are in life. If you're young and building, lean heavier on VTI, something like 80% VTI and 20% SCHD. If you're mid-career and want real income building alongside growth, 60-40 is a strong target. If you're near or in retirement and income is the priority, shift toward 50-50 or even 40% VTI and 60% SCHD. Once a year, check your allocation. If one fund has grown faster and your split has drifted more than 5% off target, rebalance, but do it smartly. The cleanest approach, especially in a taxable account, is contribution rebalancing. Simply direct your next investment toward whichever fund is underweight. No selling, no tax event, just intentional buying. And reinvest your SCHD dividends every single quarter. Investors who bought SCHD in 2020 now enjoy a yield on cost close to 6%, not because they did anything clever, but because they stayed in and let the dividends compound into more shares. That's the whole strategy. Simple, boring, and quietly making people wealthy. I'm not going to pretend this portfolio is perfect because no portfolio is. The one real gap is international exposure. VTI and SCHD are both US focused. If global markets start meaningfully outperforming US stocks for an extended period, you could lag. If that bothers you, a small allocation to an international ETF like VXUS can round things out without complicating the strategy. But even without it, this two-fund combination has a track record that speaks for itself. Here's what I want you to leave with today. The market is confusing right now. The headlines are scary, and most people are either frozen or making emotional decisions they'll regret. But the investors quietly holding SCHD and VTI, they're collecting dividends. They're watching their income grow, and they're positioned to win no matter what the market does next. Two funds, one strategy, built to last. Drop your current split in the comments. Are you Team VTI, Team SCHD, or running both? I read every single comment and I want to hear where you are in your journey. If this video helped you see things differently, hit that subscribe button. We break down simple, powerful wealth strategies every week. Smart investing, profitable results. I'll see you in the next one. This video is for educational purposes only and is not financial advice. Past performance does not guarantee future results. Please consult a licensed financial professional before making investment decisions.